Now, okay, so now we're recording. Um, so, good morning, everybody, and thank you all for taking the time to come here and hear our man Carl talk about some end of year stuff and some good stuff, some good tax stuff. Um, I think, looking at who's on, I don't need to tell you, but I am Bernie Rydell from the Rotary Club of Hilton Head Island and the chair of our $1 Million campaign. And I will also be serving as our host today on this Zoom. Special shout out to where is our governor, Pauline? Wave there. That's our governor, Pauline. And we have our DRFC, Paula. Paula, give a wave. Now, I'm sure I'm looking around, most of you know this, but DRFC means District Rotary Foundation Coordinator. Paula's in charge of the foundation in our district. That's what you need to know. So that's Paula. Okay. Some housekeeping items. Please stay muted, except for Carl. Put your questions and don't be afraid to ask a question. That's why we have Carl here to answer questions. When you put your questions in the chat box, put them on all caps. All caps. If you have any comments that you want to make, put those in lowercase, but that'll help Paula. Paula is going to manage the chat box. And so when we get to the point where we're going to talk about questions, she'll be able to highlight, go right in and look at the caps and be able to address the questions. And we're going to do the interview first, and then we're going to go to the questions after the interview, and Paula will handle that. Of course, you know, because you were all here when I started it, we are recording the session. Yes, we are recording the session. So, Carl, good morning, and thank you for taking time after, I know, a busy week last week with training, and you only had like a day or two off, but you managed to be here today. So thank you for coming in and doing this with us.
You're welcome, Bernie. Thank you for inviting me. It's really good to be with District 7770 here on Zoom this morning. So thank you for setting this up, and thank you for everybody who's worked on setting it up and all the participants for being here today.
I know we're not going to go into detail about Carl's resume because I attached that. You should all have it in detail. But there are a couple of things I wanted to highlight. Carl, you became a Rotarian in 2000.
That's right.
How did that come about?
Well, like a lot of people, I joined because of the job I had at the time. I had learned about Rotary when I was a child because my childhood pastor was a Rotarian. And so I always saw, Rotary through his involvement in Rotary. And when I became a Salvation Army Executive Director, it made sense for me to join Rotary at that time in the little town of Peru, Indiana, which is a small town halfway between Indianapolis and South Bend. If you're familiar with Indiana, it's in the middle of nowhere, a little small rural community. And it's one of those towns where everyone in that town who was in any position of leadership was a member of the Rotary Club. And so as a new executive director, I knew that that was where I needed to go to meet other leaders in the community and to learn about the community that I had just moved to for that job. And so that was in the year 2000, now 20 years ago. And one of the best decisions I ever made was when I decided to join that Rotary Club. And I joined the staff about 13 years after that. And these days, I'm very happy to still be both a Rotarian as a member of the Rotary Club of Raleigh, here in Raleigh, North Carolina, where I live, and also obviously your staff partner as your major gifts officer.
I think we all feel the same way about when we started and joined Rotary a number of years ago. When we think going forward, what that has meant. For me, it's made so many friends. The fellowship, especially the fellowship that you have with all these Rotarians, is something that you just don't get anywhere else. So, yep, thank you for sharing this. You did become a member for the staff of the Rotary Foundation in 2013. You are now a senior major gifts officer, dealing with gifts of, some people may not know this, but you deal with gifts of over $10,000. You don't deal with the little stuff. You deal with the big stuff. So tell me, what is most challenging about your job? And then what is the most fun about your job?
Great questions. I don't think anyone's ever asked me those before. Bernie, you're a great interviewer.
Yeah.
So the most fun thing about the job is who I get to work with. It's the best thing at Rotary is the people I work with, both in terms of my staff colleagues who are all phenomenally impressive people. I'm always amazed at the caliber of my staff colleagues. They're good people I can turn to. And when I need to support for a gift that goes beyond my skills, I have a great team of professional colleagues to whom I can turn and receive support and give the donors the best service possible. So I love my staff colleagues. Most of all, though, I love the donors with whom I get to work. In Rotary, we meet wonderful people. I've met admirals and generals. I've met entrepreneurs. I've met people who have come to this country with just a few dollars in their pocket and have gone on to do phenomenal things and have great charitable impact at the multi-million-dollar level. I've met people who have spent their entire lives in one community and are so deeply rooted there and want to make a difference there. And I've met people who have traveled the globe and have been to places I didn't even know existed until they told me about them. And so in Rotary, the best thing is the people with whom I get to work. The challenging part is the way Rotary works. As you know, one of our keys to our strength is our diversity and our organizational structure. So we are all members of Rotary clubs. Clubs are members of Rotary International. They're organized into districts. They're organized into zones, and we're all Rotarians. But we have a different experience of Rotary from one another because of the differences in our clubs and our cultures. And so I work with folks who live in the Carolinas and Southeastern Virginia, which is a fairly homogeneous chunk of ground when you take it from a global perspective. However, there's a lot of diversity within the Carolinas and Virginia as well. And so when I'm working with donors in one place, they understand Rotary to be one thing. And when I cross a district line, their experience of Rotary is very different. And so one of the things that's challenging for me is to stay on top of those changes in the different districts, the different things that the different clubs do, the way Rotary is lived out differently from one place to another impacts the donor's perspective of Rotary. And as a gift officer, I need to know those differences somewhat. And so trying to learn all of the different ways that Rotary is lived out over the course of the territory I cover is challenging to stay on top of. It's a fun challenge to do because I get to talk to people like you and Paula and Pauline and say, what's going on in your district, in your neck of the woods, so I can keep abreast. But that is a challenge for me to stay on top of all those differences.
Wow. That was a long answer. That was a long. I didn't picture it being that long. This is the last thing I'm gonna ask you, and then we'll get into the meat of this stuff. What is the one thing not in your bio that is something that is important to you that Rotarians might find interesting?
Oh, that's a good question. Well, I have a lot of hobbies that I keep myself busy with when I'm not involved with Rotary. I'm an amateur radio operator. I do a lot of work that way. I also serve on a couple of boards here in the Raleigh area for different nonprofits, mostly doing pro bono consulting to help them with fundraising. And I'm very involved with the Episcopal Church here at the diocesan level in the Diocese of North Carolina, as well as my local parish. I serve as senior warden here at my local church.
Oh, okay, outstanding. All right. Now let's get to it. Much of what we're going to cover today deals with the CARES Act. Tell us a little bit about the CARES Act.
Wonderful. So when the coronavirus struck, our government responded in several different ways. And one way we responded with some changes to our tax rules. And these changes were designed to help our country get through the pandemic better. The tax changes are called the CARES Act of 2020. And the CARES Act of 2020 made a few changes as they relate to charitable giving. And I think they're important changes for us as donors to be aware of as we think about our own charitable giving in this very unusual year. And as we start the last month of this year, many of us are thinking about year-end gifts. And so we're going to go through a couple of the most significant changes to the tax laws. But before we do that, it's important to clearly state that nothing in this webinar is given as legal, tax, or financial advice. I'm not an attorney. I'm not a CPA, not an enrolled agent with the IRS. I'm not a notary public. I am simply here to provide information for you to take to the professionals of your choice to help you make the best decisions possible.
And I had that disclaimer in the email too, Carl.
Good.
Just-
It's
just
on my
so you know.
signature line. It's very important that we
Yeah.
all understand what
I
we
know
are.
it is. No, exactly. All right, there is a special $300 deduction that's part of that CARES Act that goes away the end of this year. Tell us a little bit about that $300 deduction.
That's a great thing to know. So everybody who files a tax return in the United States, regardless of whether they itemize or not, in the year 2020, will be able to deduct up to $300 in charitable giving. And usually only itemizers get to take advantage of a charitable gift deducted as part of their income tax return. This year, everybody gets to take $300 off. So please give at least $300 to charity. You know, don't waste that opportunity to deduct, even if you file short form. And what I suggest, Bernie, is that we give it to Polio Plus. Mary's background there shows Polio Plus. You know, when we give to the Polio Plus Fund, it's matched 2-to-1 by the Bill and Melinda Gates Foundation. So if you give your $300 to Polio Plus, the Gates Foundation gives $600 to Polio Plus. That's $900 worth of virus eradication being done. And we get the tax deduction, even if we file short form. And golly, if 2020 has taught us nothing else, it has taught us how important virus eradication truly is.
To be upfront, I did not tell you to say that about polio, did I?
No, we're all on the same page. It is our #1 priority, Bernie.
Oh, okay, good. Hang on, there you go, do not disturb. Okay. Also in 2020, there's you can take a charitable deduction of up to 100% of your adjusted gross income. Now, that's huge, isn't it?
That's a wonderful change, and that has the greatest potential to help people make charitable gifts in very efficient ways, and therefore help the nonprofit sector do great things, which is why the law was changed to this. So normally in most years, we can only deduct up to 60% of our adjusted gross income as a charitable gift in that year. So if our adjusted gross income is $100,000, we can deduct up to $60,000 as charitable giving in that year. Above that, we can't deduct it. It has to roll over for future use. This year, that's changed. We can deduct up to 100% of our adjusted gross income as a charitable gift. That means we could completely offset our income with a charitable deduction this year. The people for whom this is going to be most helpful are people who have significant accumulated assets and maybe relatively low adjusted gross income. A retiree might fit in that category. Someone who had years of high earning while they were working, have accumulated assets over the years, would like to make a charitable gift, but in retirement, their adjusted gross income is relatively low. And so the amount that it makes sense to give in any one year is only 60% of that adjusted gross income. This year, they can give up to 100% of their adjusted gross income with a gift. That is very helpful to a donor who says, I'd like to make a gift for my accumulated assets, and I'd like to do it in the most tax efficient way possible. This year, they can make that gift and offset their income completely, 100% of income adjustment offset with the charitable gift. That's very important to know. And many people just haven't heard that change. And so please share that not only with yourself as it applies to you, but with your friends and neighbors and family and fellow Rotarians. We're getting near the end of the year, and I really want everybody who might benefit from that to hear that message loud and clear.
So unless Congress does something or passes a CARES 2 Act or something, that goes away and we go back to 60% the way it's been, correct?
That is correct.
Yeah, okay. Now, there's some changes to the RMD, the required minimum distributions. That's pretty simple, but talk about that.
Right. So in most years, people who are overaged 70 and a half have a retirement account that they have to take a distribution from as part of the law. Required minimum distribution, RMD, the R means required. This year, those have been suspended. So people who in the past have had to take a required minimum distribution don't have to do that this year. No one has to take a required minimum distribution. So what that means is that everybody who's in that retirement situation needs to think about their own situations as they apply to them uniquely. And for some people, it might make sense not to take a distribution, but just to let the account grow in value. For other people, it might make sense to take a distribution, but there's no universal answer to that. Everyone's financial position is unique. And so everyone really does need to talk to their advisors to figure out what's right for them. Where that impacts our charitable giving is that in most years, there's something else separate from a required minimum distribution that any donor who is over age 70 and a half and has a traditional IRA can take advantage of. The donor who is over age 70 and a half and has a traditional IRA, it has the ability, instead of taking a distribution from that IRA, they can give money directly from the IRA to charity. That is called a qualified charitable distribution, or QCD. The reason a donor might like to do that is because when they give the money directly from their IRA to the charity, instead of taking it as a distribution, they don't incur any income from the account. Therefore, they don't have any income tax liability on that distribution. So in most years, we take the money out of the IRA, we pay tax on it. Instead of doing that, we give the money from the IRA directly to charity. We don't have to pay any tax on it. That's a tax savings, whether we file long form or short form. And the charity doesn't have to pay tax on the money it receives because it's tax exempt. And so it's a very tax efficient and easy way for donors who are over age 70 and a half and have a traditional IRA to make a charitable gift and benefit from a tax perspective. However, this year, donors who have done that in the past might find that this isn't a good strategy in 2020 because they don't have to take the required minimum distribution. And since they don't have to take a distribution at all, it may or may not be the best way to fund a charitable gift with a qualified charitable distribution. So it still might be, but it might not be. And your answer is going to be different than your next door neighbor's answer. And so it's really one of these things that everybody this year needs to talk to their advisors about and bring that question to the table and say, for me and my circumstances, should I give with a qualified charitable distribution this year or not? And then act according to what's in your own best interest. But things that have been set on autopilot that just always make sense and have for years might not make sense in 2020. And so that's one of those different things that we all need to address if we're in that situation.
Talk to your financial advisor.
Yep.
Yep. Is there a unique opportunity regarding Roth IRA conversions this year?
Yes. The combination of the two things that you've already brought to our attention, number one, the ability to deduct up to 100% of our adjusted gross income as a charitable gift, coupled with the need, the removal of the required minimum distribution, make it a good opportunity for people who are looking to convert money that's in their traditional IRA into a Roth and make charitable contribution. It works out that these changes to the tax laws will allow a donor to, say, take money out of their traditional IRA and convert it to a Roth. They normally would have to pay a significant tax burden on doing that. And so it's a question of whether it's worth it. Every donor, every individual has to ask themselves that and look at their advisors. But for many people, taking that tax hit at the conversion from a traditional to a Roth makes it not very appealing. This year, however, because we can deduct up to 100% of our AGI as a charitable contribution, a donor who wants to do that and also wants to make a charitable gift from their accumulated assets can do both this year and benefit. So the donor can take the money out of their traditional IRA, make an offsetting charitable contribution in the amount of that transfer. That offsets the tax liability, and then take the money they've taken out of the traditional IRA and start the Roth that they wanted to start. This allows the donor to end up with the Roth product instead of the traditional product in their portfolio. So that goal is accomplished. It allows the donor to avoid paying an income tax on that distribution out of the traditional IRA because they made the offsetting charitable contribution and were able to deduct it. And it allows the donor to make the large charitable gift that they've been wanting to make in a very tax efficient way. And so the people who are going to benefit from that is just a small percentage of the population. But for those small percentage of the population who've been wanting to do a Roth conversion, who have the ability to do the offsetting gift, this is the year to do that. This is one of those rare windows of opportunities where all the stars align, and it doesn't happen that often. And so again, this is one of those opportunities that won't be for everyone, but for the people that it is right for, it is wonderful. And it's really a great opportunity, and it's time to act because it's already December 8th.
Wow, if it fits, you could save some big money.
You can really save some big money. You can have a huge charitable impact, and you can end up with the product in your retirement portfolio that you really want to have there.
Luckily, the stock market is up. So talk about end of year strategies with appreciated stock.
Absolutely. And when many donors think about giving, we think about writing a check. And for most of us, that's actually not the best way to give. So this year, the stock market is doing very well by all of the indices that I follow. And we're grateful for that. And so that means that a lot of us own some accumulated stock. When we've owned a stock for more than a year, if we were to sell that stock today, we'd have to pay capital gains tax. If instead of selling the stock, we give it to charity, we don't have to pay the capital gains tax because we've not realized a capital gain. We've given away an asset. So we avoid the paying of the capital gains tax altogether when we do that. Additionally, we receive an income tax receipt for the fair market value that the stock held on the day that ownership changed. And so I get to take a tax deduction on my income taxes for the high value of the appreciated stock, and I don't have to pay capital gains tax at all. And the charity receives the stock at the high value, does not have to pay any tax on it whatsoever, again, because the charity is tax exempt, and can put 100% of that value to the charitable purpose the donor wants to accomplish. And so many people this year will find that their year-end giving is best accomplished by making a gift of stock. And this will also apply to many people who used to give out of their traditional IRA with that qualified charitable distribution. Many of those folks will find instead of doing that, that this year the best thing to do is simply make a gift of stock that they own outside of a retirement plan. And it's a pretty straightforward process. The way it would work, someone who would like to do that should send me an email. I will email you a 2-page form. One page you give to your broker, and it tells them all the transfer instructions they need, whatever type of stock you've got, the appropriate instructions are on that page. The second page you send in to Rotary headquarters in Evanston to let them know 100 shares of Apple are heading your way and it's from me. And that way they know when the shares hit the account who the donor of record is and the charitable impact the donor would like to have with that. So it's pretty straightforward, but also acting sooner rather than later is important. As we all know, we're coming into the Christmas holiday season and the year-end holiday season, and things will get very busy, and we'll have office closures on holidays and things. So year-end giving, 8 December is a good time to make the year-end gift.
Yeah, not much time left. Not much time. Okay, let's shift gears a little bit. Let's get off the CARES Act. And for all the Rotarians that are giving to the foundation, there's some opportunities here. There's 3 funds that you can basically there's 3 funds at the foundation that a Rotarian can give to. Let's talk about those a little bit. First up, the annual fund. What makes the annual fund special?
Wonderful. You're absolutely right. We have 3 principal funds that make up the Rotary Foundation. So when we say we're giving to Rotary, we mean the Rotary Foundation, and then we mean any of these funds are a gift to the Rotary Foundation. It's which of these funds do I want to use? And the first one is the annual fund. Like every nonprofit that I know of, we do an annual appeal. We ask every Rotarian to give every year. I said, I joined Rotary in 2000. I learned about the annual fund in about 2006 when the E-Ray program came out, every Rotarian every year. And we ask everybody to give at least $100 to the annual fund. And that's just something we do as Rotarians as part of our culture of philanthropy. And your district does a great job of annual fund support. When we give money to the annual fund, what makes it special and different than any other nonprofit I know about is how well it's organized. The money gets invested for a period of 3 years. The earnings off of that 3-year investment cycle are what get used to pay for the operating costs of the foundation, the administrative costs, the fundraising costs, the expense of existing as an entity get paid for from the earnings off of that 3-year investment cycle. After that 3-year investment cycle is over, the gift gets shared. 50% goes to the World Fund, which is the trustees' discretionary funds, which says to the trustees, who are global perspective holders, wherever you see the most need in the world right now, you use that money. And this year, the trustees, not surprisingly, used a huge chunk of World Fund to support COVID-19 relief efforts. That was something that came up that they had the ability to respond to because the World Fund gives them that discretion. So half of it is the World Fund. The other half gets used by districts to support whatever priorities they identify locally. We call that half the district designated funds. So for me, that means the district leadership here in the Research Triangle of North Carolina figure out what, from our perspective here in Central North Carolina, do we see the best use for that at our local district level? What do we want to support globally? What do we want to do with regards to Rotary's programmatic work? What do we want to support in our own communities? And for you, that means your half of South Carolina, your kind of Eastern South Carolina half, that's local to you. And so your district leadership decides in our chunk of the world, what do we want to do with those money? Where do we see the most benefit? And that way of spending our money is kind of putting our money where our mouth is when we as Rotarians say we believe in being good citizens, both locally and globally. The way we share our annual fund money really lives that value through the way we spend those funds. And the way that we handle it with the investment cycle to pay for our operating costs ensures financial stability to the organization. It allows us to be a very strong voice in the nonprofit sector. It allows us as donors to have faith in the continuity and long-term sustainability and efficacy of the organization. And it allows us then to spend the donation according to the donor's values after the 3-year investment cycle, 100% on the charitable impact that the donor wants to have.
You know, you mentioned the DDF, the district designated funds, and you know, there's so many Rotarians out there that don't consider giving to the Rotary Foundation because they want to support local activities, local organizations. But the DDF that comes back, the district funds, the district DDF, is a way to get into the clubs and let the clubs know, hey, there's money coming back here from the foundation to help clubs locally. I think in our district, we found that to be an important thing to get clubs and Rotarians aware that money actually does come back from the Rotary Foundation. The other thing is on the World Fund, being a polio guy, last year, the World Fund made a decision to go from 50% match to 100% match of DDF. So when a district gives money, DDF to polio, last year they made it a 1-to-1. So if we gave $100,000, the World Fund actually matches that with $100,000. Last year, they're doing it this year. I'm not sure. Hopefully they'll continue it next year, but I'm not sure. But that's also part of what the World Fund does, is to help us out with polio. Okay, well, we got the polio fund. Talk. It's pretty straightforward, but what happens with that?
Right. So polio is the only fund that we really don't try to invest and get a return from. With polio, it's our #1 goal. We want to eradicate this virus from the face of the earth because we promised the mothers and children of the world that we would do that. And we as Rotarians are people of integrity and we keep our word. And so we're going to do everything we can to eradicate that disease. And we have no doubt that we will succeed. And in order to do that, we keep those funds very liquid. They're invested in a way that allows us to have frequent access to them so that we can spend them as necessary to vaccinate children and support the critical infrastructure that's necessary to the worldwide effort to eradicate this virus. The most important thing to highlight about the Polio Plus Fund, beyond that it's our #1 priority and that we have a duty to support it, and we should be proud of that, is that we are in the partnership with the Bill and Melinda Gates Foundation. And so when we give $1 to Polio Plus, they give $2 to that. So that's really a great opportunity for leverage. And so when we're looking at where can I have the most impact with this gift that I have to share, Polio Plus is really the place for high results, high leveraged impact today, and really a great way to put some philanthropic dollars to high impact.
Yep. And the last big fund is the endowment fund. So talk about that.
Right.
Yep.
This is the long ball fund of Rotary. Today, when we say the Rotary Foundation's philanthropic impact, we think of Polio Plus, but we will eradicate polio at some point and not need that Polio Plus fund anymore. That will go away eventually. The annual fund today is our bread and butter because we give every Rotarian every year to it. The endowment fund, however, if our next generation of Rotarians was giving this presentation, they wouldn't be talking about polio except as a legacy, something we accomplished. And the annual fund would still be there, but it would be dwarfed by the impact of the endowment fund. Because the endowment fund, when we give a gift to it, that gift stays invested for perpetuity, which the actuaries tell me means a very long time. And so the money that goes into that fund stays there and accumulates, and it generates earnings. And those earnings are what gets spent on the philanthropic work that the donor who made the gift selects. That allows us to have impact year after year after year. For instance, if I was to give $25,000 this year and I gave it to the annual fund, it would be invested for 3 years. It would support the foundation's operating costs. Then it would all get spent. In year 3, it would be spent and the impact would be had. If instead of doing that, I gave it to the endowment fund, it would be invested forever. And with our 20-year average rate of return would generate about $1,000 a year. So in year 25, I've broken even with my charitable impact of $25,000. On year 26, I'm 1,000 ahead. On year 27, I'm 2,000 ahead. And you can do the math and figure that in 100 years, the way to have the biggest charitable impact long-term is with that gift into the endowment fund, where those earnings just get spent every year, year after year after year, forever, as long as Rotary is around and the world has needs. So when we think about supporting the endowment fund, we can do it really in 2 ways. One is we can make a gift during our lifetime to it. Any of the funding vehicles I've talked about already work, or we can put a provision in our estate plans so that at our death, money transfers from our estate into the endowment fund. That's the most common way of supporting the endowment fund. And that little example I used of $25,000 a minute ago is really a cool one, because many of us are members of the Paul Harris Society. I am. I know all the people I see on this call who I know also are. Many of you who I don't know, I'm sure are as well. We give $1,000 every year that we're able to the annual fund or Polio Plus. That's our commitment, and we get recognized as members of the Paul Harris Society for that. If we couple that with a bequest of at least $25,000 in our estate plan, what that means is that at our death, when we're no longer here to give that $1,000 a year, our estate will have provided a corpus into the endowment that's big enough to earn $1,000 a year. And so we will still have that same level of philanthropic impact that we are having now throughout eternity. That way, when we're not here to write the check anymore, that good work is still being done. And at the $25,000 level, we can create a fund within the endowment that bears our name or our family's name or our children's names or the name of anyone we'd like to honor or remember. We call that a named fund. And that allows that good work that's being funded to be funded in our name or the name that we've created the fund in. So it's an opportunity to leave a legacy through the Rotary Foundation. And if we set up a named fund during our lifetime, we get a report each year mailed to us that shows our fund's beginning and ending balance and bullet point some of the philanthropic work that's been done. If we set it up in our estate plans, our children or our heirs or our neighbors or our fellow Rotarians can get a report that shows that. And so it's a great opportunity. A lot of Rotarians like to set that up because they know their kids will like to get mom and dad's Rotary report fund in years future and create that sort of lasting family legacy of philanthropy through Rotary. So the endowment fund is a great tool for us both to have impact as well as leave personal legacy. And of all the work Rotary does, we can endow support for any of it except polio because that's temporary. We're going to eradicate polio, so we don't use the permanent fund for a temporary problem. But any of the other things Rotary does, any of our 7 areas of focus, the World Fund, Peace Centers, or that concept of sharing locally and globally, can all be supported through a gift to the endowment fund.
Wow, that's folks. Didn't I tell you that he was wicked smart? Didn't I? Well, this is proof. What you just saw was this is wicked smart right in front of you, Carl. What did I forget to ask you? I went down my list, but was there anything that I forgot to ask?
You didn't forget to ask anything, Bernie. You're a great interviewer, and you're way too kind to me. But I would like to also mention there is one other gift type that we didn't talk about today that I'd just like to put on people's radar screens, because it is a cool gift opportunity for donors who are over aged 50 that many donors don't know exist. And that's the opportunity to do a life income agreement with the Rotary Foundation. They come in various flavors. The 2 primary ways to do a life income agreement is a charitable gift annuity or a charitable remainder trust. There are lots of flavors in those categories that I won't get into. Conceptually, however, what happens is the donor who is over aged 50 would like to make a gift of $10,000 or more, and they'd like to receive some income for the rest of their life. Those are the things they'd like to do. So the donor makes the gift to the Rotary Foundation. The donor receives a tax receipt for a portion of that gift. And in exchange for making that gift, the donor receives income for the rest of their life, or in the case of a couple, the rest of both of their lives. This allows the donor to receive income from a stable source, backed up, if it's a charitable gift annuity, by the full faith, credit, and assets of Rotary, which we know are robust and solid. In the case of a charitable trust, by the assets that are placed into the trust. So the donor gets income. Many times donors set this up as part of their retirement plans. And the donor gets to receive a tax receipt, which is helpful. And a portion of the income that the donor receives each year is not subject to federal income tax, which is also tax efficient, especially since many donors won't be itemizing in retirement. Having income that's just not subject to income tax is particularly helpful. And most importantly, the donor gets to accomplish the charitable goal that the donor has. Any of the great programs that Rotary does, again, except for polio, because that's temporary, can be supported through a life income agreement. And so I know several of you on this call have done those with Rotary, and others might be thinking about it. But if you're interested in that sort of gift opportunity, be in touch, and we'll provide you a customized illustration based on your circumstances. And many donors find that to be a great way to do what they want to do. And so I wanted to put that on folks' radar this morning too.
Especially, I would think, especially this year, because of the 100% deduction of AGI, that you may be able to do something like that also, and would affect how much you can deduct.
It's going to, the 100% of AGI deduction applies only to cash, and I don't believe it applies to life income agreements. So we're going to have a personal conversation for everybody's circumstances there, because there's a couple different rules that need to all be, there's a multiple box checklist that needs to be checked through there. And we would just do that in a one-on-one setting with each donor and their advisors. But it very well might be a good time. One of the reasons that that's really a good time to consider now is that we're in an extremely low interest rate environment. Now, what interest rates will do in the new calendar year, is whatever your magic 8-ball says. We all look at our magic 8-balls to predict the future about interest rates, and your mileage may vary. But one thing we do know is that we are in a very low interest rate environment now. And so locking in a rate with a charitable gift annuity will allow you to have an interest rate that's probably higher than what you're going to find sitting in a money market account or something like that. I've worked with a donor who's 70, who's getting 5.5% on a charitable gift annuity. So there's that opportunity. And with a charitable remainder trust, the donor has the option of setting their percentage of return within a parameter. And so it's an opportunity to name what percent return you want, which is helpful in a low interest rate environment, especially.
Okay, Carl, again, amazing. I don't see anything in the chat box. Paula, have you watched it? Maybe.
No, I don't see anything in the chat box right now, but maybe we'll have a question or two that'll come in.
Maybe,
Um,
maybe.
And I would like to take this opportunity as your district foundation chair to thank Carl for making such a great presentation about all three of our funds and the opportunities that are available to us. And I'd also like to just put in a plug and say that we are in the middle of our Matching Points campaign. And those funds go to the annual fund that Carl described. And so if any of our members donate $300, we'll match those points. And the first one you talked about seemed most appropriate for that particular thing. And the endowment opportunities, just so folks on this call know, we received about $6,767 from that endowment that came to us this year to spend here in our district. That was our half that we could spend in our district, in addition to the other 376,000 we got. So.
Well, I don't see any questions. So Carl, you must, as always, you did a fantastic job and left nobody with not knowing anything. So that was very good. So, okay. This has been good. Took 45 minutes, so we're coming in under an hour. So I feel good about that. And I think we covered an awful lot of territory.
It looks like Jim Cherry might have a question there, Bernie.
Oh, okay. I'm sorry. Unmute yourself, Jim. Go ahead. Unmute. I'll get you. Well, maybe I won't. There you go. Go ahead. Go ahead, Jim.
Uh-oh, he's talking. He doesn't show he's muted, but I can't hear him. Jim, maybe type your question into the chat room.
Yeah.
Your mic might not be working.
And we definitely want to hear your question because you're like numero uno here. You're like number one.
Paula, while he's working on that, tell me when the match ends, please.
January 8th.
Thanks.
And there is, Carl, I believe there is an additional in the CARES Act that affects January 8th. Well, actually giving into the next year. But I think that has to do with folks that aren't able to itemize currently, and they tend to make their charitable contribution in 1 year, stretch it over a 2-year period as to a 1-year period. I don't know. That's about all I know about that.
Let me look into that, Paul. I have not run across that yet. That's very interesting to know. I'm making a note here on my scratch pad to look into that. That would be interesting. Of course, the big question is if you follow the news, it does appear that Congress is attempting to do something else this calendar year with regards to relief for COVID. And big question mark there as to what that might mean. Maybe an extension of, your magic 8 ball on that is as good as mine. And also there's some tax law changes proposed by the incoming administration as well, which would have significant impacts on the way we do charitable giving. But again, that's a big question mark as to what really will happen there too. But the future is a big question mark for us. So, when we're trying to make our plans, we do the best we can.
Paul, I do think I think David has a question in the chat box.
Well, he said his computer went on the blink when we were talking about Roth IRAs. David's computer went on the blink. Could you please go back over that segment?
Sure. So when someone has a traditional IRA and they'd like to convert it to a Roth product, and that could be for many reasons, maybe they just, my phone rings. When they set up their IRA program, Roths weren't a thing yet, or they didn't choose that for whatever reason. And today they'd like to have a Roth IRA instead of their traditional one. generally there's a tax penalty that has to be paid when we take money out of the traditional IRA to establish the Roth. Because this year we don't have to take required minimum distributions from our retirement accounts, and we're allowed to deduct up to 100% of our adjusted gross income, an opportunity exists for people who would like to make that conversion and also have the ability and desire to make an offsetting charitable gift to do something really cool, and that they can take the money out of their traditional IRA, instead of paying the tax on it like normal, make an offsetting contribution to charity. Therefore, they'll receive a tax receipt so that that offsets the tax liability they would normally have on taking that distribution from the traditional IRA, and then use those funds to establish a Roth IRA. That allows them to end up with the Roth product that they want in their portfolio. It allows them to avoid the tax hit that they would normally have to do that, and to have the charitable impact that they've wanted to have with a major gift to charity. And so for donors who those things all align for, this year is kind of a special year where you can, it's kind of, I look at it as like moving windows all on a wall, and you're trying to shoot an arrow through, and all those windows on these moving walls all have to be lined up at the same time for the arrow to make it all the way through. This is one of those rare opportunities where all those windows align, that you can actually, do something like that. And that's 2020 only, at least so far.
We have one more question, Carl. What fees are involved with the gift annuities?
There's actually no fees specifically involved with the charitable gift annuities. The way Rotary does a charitable gift annuity is the donor makes the gift and the donor receives the income. What's left at the end of the time is all, it uses the same actuarial math that insurance companies use when Rotary administers it. Rotary sends the payment and all of that with the actuarial prediction that's almost always right, because that's why actuaries are geniuses, that at the end of the day, because Rotary's had this money for this period of time and has been able to invest it, et cetera, and is going to have it longer than one person's lifetime, that at the end of the day, whenever that is, Rotary is money ahead, even though they've paid out those annuity payments. And so the Rotary Foundation estimates that on average, for our average annuitant, we're going to actually end up with 50% of the annuity gift at the end of the day to do charitable good with. So if a donor does a $10,000 charitable gift annuity, the actuarial tables would tell us on average, we're going to end up with about $5,000 worth of money at the end of the day to do charity with. And the rest of it will be, cost of having the annuity. And that's $5,000 we wouldn't have if we didn't offer charitable gift annuities. And so Rotary does that as a way to be of service to donors and to use this tool to allow donors to make gifts that they otherwise wouldn't make. So there's no particular fee involved with the charitable gift annuity. The cost of running the program is absorbed as an operating cost of the foundation operating the charitable gift annuity program. And the tax receipt that the donor receives reflects those actuarial predictions that are based on age. So an older donor is going to have a higher percentage of their gift that they can take off of their taxes, because the actuarial tables say, well, that annuity is going to pay for a fewer number of years than a younger donor is able to, because the actuaries say that donor is going to live longer. And so we follow the advice of the American Council on Charitable Gift Annuities, which is an independent nonprofit that exists specifically to give other nonprofits guidance on how to do charitable gift annuity programs. And all of your reputable nonprofits that do charitable gift annuities follow the guidance of the American Council of Charitable Gift Annuities. So if you're shopping around and you find a nonprofit that's rates are really out of line with the rest of the industry, really put a big question mark in front of them. They're not following the American Council of Charitable Gift Annuities advice, and that's usually a bad thing. When we're looking at an annuity, whether it be a commercial annuity or a charitable gift annuity, we have to look at the financial health of the organization offering it, because our payments are backed up by that organization's financial health. And so usually if you find some organization that's willing to give really high rates, it's because they don't have the greatest financial health and they need to do something to attract donors.
Hmm.
And so follow the American Council on Charitable Gift Annuities predict or guidelines, and you're very safe. So Rotary does conform to that industry best practice.
Jim, did you ever get your question in?
I don't have any other questions here.
No.
I don't-
Yeah, his mic isn't working. Can you use sign language, Jim? Can you
Or
use
just
sign?
type it in. Could you, Jim, can you type in the chat window?
I thought that's what he was doing, but was
I don't
going.
see a message from Jim. I only see David and Betsy's questions in my chat window.
Yeah, yeah.
Yeah,
Well, Jim, I'll tell you what, if you just email me, carl.davis@rotary.org, I can answer your question. I just put my email address in the chat window.
Very simple. Carl, C-A-R-L .davis@rotary.org. Very simple to remember. Okay. All right. Very good. Thanks, Jim. Governor Pauline, did you want to say something before we break?
I always want to say something
I
to this
knew that.
awesome crew.
I knew it. I knew it.
Yeah, of course. I'm so blessed to have such great leadership in this district, always ahead of the ball, always on top of the game, and to take on, Paul Walter isn't on this call. I'm sure he'll be on tomorrow. When he and I agreed to team up and make sure this $1 million campaign took off. And of course, conversed with Bernie a number of times, but he never was doubtful that we would make our mark. So I'm so happy about it. At the last, yeah. So, and everyone on who's joined the team and has made a contribution. I mean, I'm beyond the moon and back. I don't know if you're sharing any of the numbers today, but I'm very, very proud once again to be a part of this district. So thank you all.
Pauline did allude, I'll mention it, I wasn't going to, but she alluded to it. Between actual dollars in the bank and promise, those are two different categories. We're over 1.8 million so far. So I truly think we're going to hit 2 million. I think we'll do 2 million and move on. So anyway, thank you. And thanks, Pauline, for all what you said. Paula, did you want to wrap up with anything foundation-ish? Nope, you're good. Okay. Everybody, thank you very much for taking the time to do this. I am now, you too? Yeah, that's my co-chair. That's my Rotary Polio co-chair. Okay, let me, I'm going to stop. If I can do this, hang, pause. No, I don't want to pause. I want to stop.